Welcome to AI Explains ITC. Today, we're going to dive deep into a topic that's absolutely essential for any serious trader: how to select stocks using fundamental analysis, all through the unique lens of ICT. All right, so this video is a complete overview of the core content from month 10, episode 18. And trust me, you're probably going to want to grab a pen and paper for this one. We are getting into the real nuts and bolts of what makes a stock actually worth your time and money. So here's the game plan. We'll start by looking at a key resource that ICT himself recommends. Then we're going to break down the famous CAN-SLIM method, piece by piece. We'll start with what makes a company healthy on the inside, then we'll look at its place in the broader market, and finally, the real secret sauce, how ICT uses his unique approach for market timing.
Okay, first things first. If you're going to do any kind of proper analysis, you absolutely need the right tools. And when it comes to fundamental data, ICT has a very specific recommendation.
And that resource is Investors Business Daily, or IBD. Look, ICT isn't just casually recommending this. He's been using it himself since the late 90s, and he flat out considers it the single best tool for this kind of work. Why? Because it's clear, it's well organized, and it really gets to the heart of the supply and demand dynamics that actually move prices.
I mean, this quote really sums it all up, doesn't it? When it comes to the hard data, the actual number crunching, ICT is crystal clear. IBD is number one. So just keep that in mind, because pretty much everything we're about to talk about is based on the kind of data you can find right there.
So let's get into the framework itself. The heart and soul of this entire approach to fundamentals is this incredibly powerful acronym that was developed by IBD's founder, a guy named William J. O'Neill. It's called CAN-SLIM.
Now, here's where things get really interesting. This is how ICT adapts this method for his own use. The first 6 letters, CANSLI, they create the fundamental reason for picking a stock. But that final letter, the M, well, that's where he brings in his own mastery of technical analysis for timing the market. It's really the perfect marriage of rock-solid fundamentals and razor-sharp timing.
All right, let's start breaking this acronym down, letter by letter. We'll start with the first 3, which tell us everything we need to know about the internal health and vitality of a company.
First up, C stands for current earnings. This is our first, most basic filter. We're looking for companies that are making money right now. The focus is all on strong, recent performance.
And here's the magic number you're looking for: earnings growth of at least 25% in the most recent quarter. But you know what? Bigger is always better. In fact, what you really want to see is that growth accelerating. Maybe it jumps from 25% one quarter to 50% the next, and then boom, it hits 90%. That is a sign of some serious momentum.
Okay, so from C, we build right on to A. A stands for annual earnings. Because look, a great recent quarter is fantastic, but we need to see that it's backed up by a solid history of consistent long-term profitability.
And here are the specific numbers to watch for. First, you want at least 25% earnings growth for each of the last 3 years. That shows consistency. Next, the company should have the best profit margins in its entire industry. That means it's just more efficient than all its competitors. And finally, a return on equity of at least 17%. A company hitting that number is a true financial powerhouse, just incredibly good at generating profits from its investors' cash.
All right, next up is N, which stands for new. And this one is so important. The biggest, most explosive stock market winners almost always have some kind of new catalyst lighting a fire under them. We're talking about a game-changing new product, a fresh management team with a new vision, or maybe even a new condition in their industry that gives them a huge advantage. And get this statistic is just staggering. Studies have shown that a whopping 75% of the greatest stock market winners of all time were companies that had gone public within the last 8 years. New is an incredibly powerful force for growth.
Okay, so once we've found a company that's strong on the inside, we need to look outward. The next 3 letters, S, L, and I, are all about how that stock interacts and behaves within the bigger market ecosystem. So S is for supply and demand. I know, it sounds like Econ 101, but it is absolutely fundamental. When you have a lot of demand for a limited supply of something, the price has to go up. In the stock market, we're looking for companies with a reasonable number of shares available to the public, what's called the float. A smaller float means that when those big institutions start buying, their demand can have a huge, almost explosive impact on the stock price. Next up is L, and it stands for leader versus laggard.
This is such a critical distinction. In every industry, you have your star players and you have your benchwarmers. We want to focus only on the leaders, the companies with the best earnings, the strongest sales, and the best price performance. You don't want to be digging through the bargain bin looking for weak sister stocks.
This quote from IBD's research just nails it. The smart money, the big money, it flows into the leading companies. And that often causes them to get even stronger and outperform the market even more. Your job is to find those leaders and just ride their coattails.
And that leads us perfectly to I, institutional sponsorship. You have to ask, who really moves these markets? It's the big fish, the mutual funds, the pension funds, the banks. For a stock to make one of those massive, life-changing moves, it absolutely needs the buying power of these institutions behind it.
Just think about this for a second. These institutions account for as much as 80% of all trading activity. 80%! That is a massive footprint. You don't want to fight that kind of power. You want to be in the exact same stocks that the big money is buying up.
And now we've arrived at the final, crucial piece of the puzzle, the M. This is where ICT takes the fundamental strength of a CAN-SLIM stock and applies his own unique mastery of market timing.
M is for market direction, and the principle here is so simple but so profound. 3 out of every 4 stocks will follow the overall market trend. It doesn't matter how amazing your company's fundamentals are if you're trying to swim against a powerful bearish tide. You have to trade in sync with the market. You have to have the wind at your back.
So how does ICT figure out that market direction? Well, one of his most powerful tools is using seasonal tendencies. Just like the seasons of the year, the stock market has a general rhythm, a predictable flow. And as you can see on this chart, there are very distinct periods where the market is historically likely to be bullish, and other times when it's much more likely to be bearish. Let's break that down into a really clear, simple roadmap. Generally speaking, you want to be looking for opportunities to buy stocks from February through May. Then, from May into about mid-September, that tendency shifts, and you should be looking for chances to sell. And finally, from mid-September to the end of the year, it's typically time to put your buying hat back on. This seasonal calendar is the key to ICT's timing.
So let's do a quick-fire recap of the entire CAN-SLIM framework. We are looking for C for strong current earnings, A for consistent annual earnings, N for a powerful new catalyst, S for favorable supply and demand, L for a market leader, not a laggard, I for heavy institutional sponsorship, and finally, M, timing our trade based on the overall market direction. That right there is the complete model.
Hey, if you got value out of this, please hit that like button, subscribe to the channel, and if you have any questions at all, just drop them in the comments below. A real human will get back to you. Stay safe out there and happy trading.